The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very warm welcome to Squawkbox Europe. I'm live in Davos, and of course, Juliana Tattlebaum is in London covering the markets. These are your headlines. US stocks see their worst day since October, pulling the S&P 500 into the red for the year as the president, Mr. Trump, ratchets up the tariff threats.
How far are you willing to go to acquire Greenland?
You'll find out.
Think much. Well, CNBC's Joe Kernan will speak to the president today. Elsewhere, challenges to central bank independence casting a cloud over Davos, with the Bundesbank President telling me that moves against Fed Chair Jerome Powell are a very dangerous discussion.
It was the US that gave the Germans an independent central bank in 1948. And that was the starting point that Germany could grow over the past decades. And now we have to discuss the independence of the Fed.
And a lawless world and a rupture to the global order. The French President Emmanuel Macron and Canadian Prime Minister Mark Carney leading the international condemnation of President Trump's foreign policy tactics.
We do prefer respect to bullies.
We are in the midst of a rupture, not a transition.
Right, of course, you know it, I know it, the world knows it. The headline event this Davos. President Trump is set to arrive in Switzerland this morning, taking the stage at the World Economic Forum here in Davos. Growing tensions over Greenland are set to be front and centre, and the stakes are high. You'll find out. That was Trump's snap response when asked what lengths he would go to in his quest for Greenland during a White House press briefing just hours before heading to Davos, where he'll meet world leaders. He also refused to give any assurances to NATO over his commitment to the alliance, and downplayed concerns that the tensions over Greenland would impact its future.
Nobody's done more for NATO than I have, as I said before. In every way. Getting them to go up to 5% of GDP was something that nobody thought was possible. And pay. At 2% they weren't paying. At 5% they are paying. And they're buying a lot of things from us, and they're giving them, I guess, to Ukraine. That's up to them, but they're giving them to whoever they're giving them to, but they're buying a lot. I think that we will work something out where NATO is going to be very happy and where we're going to be very happy. But we need it for security purposes. We need it for national security and even world security. It's very important.
Well, CNBC is front and centre. We're privileged, really, to have an interview with the president. Don't miss our interview with Donald Trump. That is right after his address. Joe Kernan has a special sit-down with the president covering all things economy, trade and geopolitical hotspots. We're going to bring you that interview on CNBC later today. The European Parliament is reportedly set to suspend the approval of a trade deal negotiated with the US back in July. Multiple reports suggest the suspension will be announced in Strasbourg today. As part of the agreement, US tariffs on most European goods were set at 15%, half the initial level, whilst the EU agreed to invest in the US and make changes that were expected to boost US exports. Well, let's just take a look at where the US markets fared yesterday. It was a drubbing, but we've seen worse, but it was a drubbing nonetheless. The Dow was down 1.8%, 870 points. The S&P down 2.1%. The tech-heavy Nasdaq was down 2.4%. 10 of 11 sectors were in negative territory, led by technology, down 2.9%. But if you want to see where it's at, I don't believe it's the equity market. I believe it's the bond market that we should all be looking at. And all the conversations I've had, if anything is going to stop the president from adventurism, people tell me it's a rising long bond yield. The 10-year currently trading at 4.29%. 0.93. Right, Karen is standing by now with the Bundesbank President Joachim Nagel.
Thanks, Steve. Yes, joining me now is Joachim Nagel, who is the president of the Bundesbank, but also governing council member for the ECB. Governor, a real pleasure to see you again.
Good morning.
I thought we'd have a year of chatting about where monetary policy could go, but it seems now that events are escalating around tariff tensions between the Europeans and the Americans. I know you were concerned last year about cheap Chinese imports coming into the bloc, but there's escalating threat as we talk about 10% to 20%. Does it mean you could be more active on monetary policy this year than you might have been?
I guess, first of all, this is a very delicate situation because all these uncertainties regarding the tariff discussions will have some spillovers to monetary policy. And what does that mean for us is that we have to take into account this uncertain situation. Taking that aside, monetary policy in the euro system is on a good path. We are more or less back to our target. So I would say, well, we are in neutral territory. Is this tariff discussion a game changer? Maybe, but I guess we have to take into account all the possibilities, all the options, but this is a very problematic situation.
That's a good point about the maybe here, because the market's talking about whether we see a Trump taco trade, whether he turns his mind around with Greenland and some of the tariff tensions. But if we just go back to what we have, the basics that have been said so far, 10% tariff in a matter of weeks, that escalates to 25% by June. So we're talking about really the first half of this year. I remember last year when the ECB was looking at the impact of tariffs, they were talking about a 1% hit to growth over the projected horizon if there was some sort of retaliatory tariffs coming through. So could we be talking about that sort of growth hit again if we do get the tariffs, 1% hit?
Well, what we already know is that the current tariff situation has some negative impact on economic growth. It's roughly around minus 0.1 coming from the tariffs. If there's now something coming on top, there will be a negative impact for sure. So I still have the hope that we can find, let me say, a solution, a joint understanding that these tariff discussions, maybe putting tariffs on top, is definitely not helpful. And the US administration should understand that at the end, I guess the highest price has to be paid by the consumer in the United States.
When it comes to some of the uncertainty that we're talking about, is it just growth or is it also price stability, inflation?
Well, regarding price stability, the whole picture is pretty opaque. So it's more on the economic growth side than on inflation. So I'm more concerned when it comes to economic growth.
We know from the experiment of 2025, it didn't really matter whether the tariffs stuck in the end. It was the uncertainty. It was the lingering negativity that also impacted business confidence. So is that a factor now?
I guess we had it yesterday that financial markets reacted. And we should take that as a lesson learned. What does that mean if uncertainty might remain over the next couple of weeks and days? So I would say we should really be really cautious what's going on here. And I really hope that the US president today in his speech, I hope will change his mind and coming to a different position.
A Davos solution of sorts.
I hope so.
I wanted to ask you about the consequences for the euro, because last year I know some of the governing council members at the ECB were concerned about the trade that was the Sell America trade. So the questions that were lingering around the reserve status of the US dollar meant a one-off adjustment in the euro. If that happens again, like what we've seen in markets in the last 24 hours or so, what would that mean?
I guess last year, this April episode, this was a very painful episode. I think we should also take it as a lesson learned, and we know how problematic things could evolve when something like this could happen again. So as I said, we should be very cautious. This is a tricky something. I think we have a setup of different uncertainties. Is it trade, geopolitical, with so many things are in a parallel mode, they are going on and they have their spillovers to financial markets. So this is really something we as central banks, we have to look at it and we have to decide on what's going on here. But I really hope that the whole situation is coming down over the next couple of days.
In the meantime, Europe has been working on massive fiscal packages that have been unleashed, and that is from the European level to Germany. Will any of this come through and benefit the European economy in 2026?
Well, first of all, this is good news. We are doing a lot in Europe to really give push to our economies. Germany is doing a lot. We have a large fiscal package this year. We will see this positive impact that is coming from this fiscal package. This year, our growth forecast is roughly around 0.6%. Next year, we will see more. And that makes it so complicated that we have this positive news on this side, but on the other side, we have all these uncertainties that have maybe negative impact in the opposite direction.
We've seen some targeted measures from Friedrich Merz, the German Chancellor, when it comes to trying to improve competitiveness in the German economy. For instance, artificially lowering the electricity price to help out industry. Are we seeing enough measures to support German industry?
I believe there's a joint understanding, not just in Germany, and I guess the German government, they're doing this right. And it's also about the European spirit, and I heard a lot of good news yesterday about our understanding how to, let me say, push things in Europe in a joint understanding. Cooperation is key. And this is also what I expect from the transatlantic cooperation, that I hope we are coming back to that joint understanding that cooperation is what we really need in a situation where there are so many uncertainties.
Some of the Governing Council members were talking about the German fiscal package, saying it was a package for Germany, that the effects will not be felt beyond Germany. What do you think?
I guess this is not right. I guess we know from the past that there will be spillovers to all over Europe, to our neighbor countries, and they will also feel that positive stimulus that is coming from the German economy.
Let me ask you about some of the jostling at the ECB. There's been a lot of focus on what's happening at the Fed and the change of positions, but there's also a renewal process at the ECB. And we saw just this week a name volunteered for vice presidency, whether that continues through the Croatian central bank governor, Boris Vucek. But it's the presidency everybody's focused on as Christine Lagarde leaves next year. Are you ready for that position? Is it ready? Is it right for the Germans to take this position for the first time?
The most important point here is that we have an excellent president, Christine Lagarde, and she will leave by the end of next year. And I do not have to say more about this.
The Germans have not held the position, though. Is that a mistake that there's been no German in that position?
Well, it's not a mistake. I think we had many good, excellent ECB presidents over the last 25 years. And Germany is the largest economy, but as I said, we are 27 members in the Governing Council, so I think we are all ready.
Are you too hawkish to have the position?
I don't think that well, this is as always dovish, hawkish. I think this discussion about who is in which camp, this is not helpful here.
Let me push on and ask you about what we're hearing in terms of some of the financial innovation. I'm about to have a panel this morning here at the World Economic Forum about tokenization. It seems to be sweeping through the financial architecture. How does Europe need to think about tokenization and the future of finance?
Yes, you're perfectly right. The financial landscape is changing. It's getting more digital, so tokenization is that what we could expect on the asset side, on the payment side. And the Eurosystem, I guess we are pretty much prepared for that. We will launch our digital euro that will come on the retail side and the wholesale side. We as central banks, we should be part of that innovations that are coming, and tokenization is definitely one of them.
Part of it, but the only player. I mean, that's the debate. There's some criticism that the ECB has really just seized the day with this digital euro, but it's crowded out any private sector players. You're not letting anyone else come in with some sort of stable coin alternative. Is that a problem?
I don't think so. I think this is a misunderstanding of our position. We will offer something. We will offer central bank money at the end. And then everyone can decide which, let me say, service they will use. So we are not closing our market. We are open to innovation. But I guess it's also our task. We are obliged as central banks to come up with a public offer.
The consequence of the success of these projects has consequences for the trade that you see in euro down the track, potentially. I thought that was incredible. If you look at what the Americans are doing with the amount of stable coins backed with US dollar, you look at what the Chinese are doing, revamping the digital yuan, where they pay out some sort of yield too on the yuan. If Europe doesn't get this right, do you see the consequence of who's willing to hold euros and the significance of the currency down the track?
I believe that we will do it right. And so we will come up with a proper solution. And so I'm not so concerned about this, but I'm more concerned in coming back to the April episode. A further dollarization, I believe it's not helpful. At the end, it's all about diversification, and we will, on the European side, we will offer something so the investor can decide where to put the money.
Joachim Nagel, thank you so much for joining us, President of the Bundesbank and also ECB Governing Council member. We appreciate the time. Stephen, let me toss it back to you.
Thanks, Karen. Well, let's just get some lines from Scott Bessent, who's speaking at the moment. He says he's frustrated with the Fed for failing to do an internal investigation, saying European countries should sit down and wait for the president to address them. Would be disappointing if Switzerland decided to get on the EU bandwagon. Let's listen to Scott Bessent.
Who had their homes burned down. He is here hobnobbing with the global elite while his California citizens are still homeless. Shame on him. He is too smug, too self-absorbed, and too economically illiterate to know anything.
Thank you very much.
Let me know if you need any further clarification.
And that goes for all of you, if you need any more clarification on that. Next question, please, gentlemen. Second row with glasses, name and outlet, please. Thank you.
Good morning, Jamie Keaton, Associated Press. Thank you, Secretary, for coming to see us again. Yesterday, the S&P 500 dropped more than 2%. Gold and silver hit new highs, and the European Union Commission President Ursula von der Leyen said that U.S. tariffs over Greenland were a mistake, and President Macron has mentioned the use of the EU's anti-coercion measures. All after you said, as you've said this morning as well, that people need to take a breath over this situation. What conversations have you had with EU and other counterparts to help stabilize markets and to help convince them to take a breath? And I'd just like to add, how concerned are you that institutional investors in Europe may be pulling out of treasuries, such as from pension funds in Denmark and elsewhere?
Well, the size, Denmark's investment in U.S. Treasury bonds, like Denmark itself, is irrelevant. That it's less than $100 million. They've been selling treasuries for years. I'm not concerned at all. Again, as Treasury Secretary, I see our Treasury auctions. We've had record foreign investment. And also, as I said yesterday, I think it is very difficult to disaggregate any of the noise around Greenland, around these inflammatory statements by President Macron, by President van der Leyen, from what we have seen in the Japanese bond markets. We saw a 6 standard deviation move in Japanese bonds, which has spilled over to other markets. And I've been in touch with my Japanese economic colleagues, and I'm assured that they will take measures to stabilize that market. And just so everyone knows, that this notion that Europeans would be selling U.S. assets came from a single analyst at Deutsche Bank. Of course, the fake news media, led by the Financial Times, amplified it, and the CEO of Deutsche Bank called to say that Deutsche Bank does not stand by that analyst report. I'm waiting for President Trump to arrive, and that will be done at his level.
Great, thank you. Let's take the next question, please. We'll move to this side of the room. Sir, right here. Name and outlet, please. Thank you.
Thank you very much. Stefan Lanz, biggest news media of Switzerland, 20 minutes. Have there been, can you give us an update on the trade negotiations and tariff negotiations with Switzerland? Have there been talks already? Will there be talks? Will you have meetings with homologues from the Swiss Federal Council?
Yeah, I'm seeing President Parmalat today, who I have a very good relationship with. We got to know each other in 2025. I find him to be very economically sophisticated, on trade, on economics. He's a fantastic advocate for the French people. And I think with his leadership that we will be able to land a trade deal that is fair for the American people and ensures the continued prosperity of Switzerland.
That's great. Thank you. We'll take the next question. Sir, right here, second row, name and outlet, please.
Yes, thank you. Holger Ahlich, Swiss business publication Handelszeitung. Mr. Secretary, I listened yesterday to your session at Davos where you said US needs to take Greenland not to be drawn into a major conflict, but by aiming at taking Greenland, aren't you creating that conflict with your allies in Europe? Thank you.
I think that we are asking our allies to understand that Greenland needs to be part of the United States. And just a little history lesson, the United States bought the U.S. Virgin Islands from Denmark during World War I. And I will remind everyone that Denmark remained neutral during World War I. They actually sold quite a bit to the Germans. But the Danish understood then the importance of the U.S. Virgin Islands. They were worried about the German ramifications if the war spread to the Caribbean, and the U.S. needed the U.S. Virgin Islands. They wanted a calm Caribbean after purchasing the Panama Canal from the French.
Great. Let's move to the next question, please. Let's go back to this side of the room. In the glasses, second row, name and outlet, please. Thank you. As a warning, everyone, we have about 5 minutes left. The schedule's a little tight today, so we'll have time for about 2 or 3 more questions at the most. Thank you.
Hi, good morning. Alina Trabatoni, Montel News. So tariffs and trade actions, in theory, strengthen the dollar, and since LNG is priced in dollars, could a stronger dollar make US LNG more expensive for European buyers in euro terms? And isn't there concern that European markets could look elsewhere for suppliers?
Well, your question doesn't make sense, because if you just said it was priced in dollars, then why would they look elsewhere for supplies? If oil comes from Saudi, it's priced in dollars. If oil comes from the North Sea, it's priced in dollars. So I don't think I understand the question.
Yeah, LNG, but I mean, they could get better deals elsewhere.
Well, I think you're tripping on your own question, that there's a global price for oil, and the only way to get a better deal elsewhere is to buy sanctioned oil from Venezuela, sanctioned oil from Iran, and sanctioned oil from Russia. I will point out that the EU, 4 years into the Ukraine-Russia conflict, continues to fund the Russian war machine by buying cheap Russian oil. In 2018, President Trump warned the Europeans, do not build Nord Stream 2. Do not buy Russian oil. And guess what gave Vladimir Putin the war chest to fund this war? The European purchases of Russian oil.
Great. Thank you. We'll move to the next question, please. I'm going to give some love to the back. Gentleman back here, please. Orange lanyard, the beard? Yeah, yes, beard. Name and outlet, please. Microphone's coming from this side.
Thank you for the floor. Raphael Zwallen, Swiss News Agency. I have a question on trade, and my understanding you would like to export more agricultural products and cars to Europe under American standards, but in the European standards are different. So are you asking European partners to change the standards, or do you respect that in Europe we may have other standards?
Well, I think that we can look at global standards. For instance, our partners in Japan agreed that U.S. standards are to remove a lot of their onerous standards. Let's be clear, Europe is a regulatory morass that is built on bureaucracy and layering of rules that constrain economic activity and economic growth. As we've seen from the Draghi report, that Europe taxes itself, I believe it's 50% on goods, 100% on services intra-Europe. So I think that Europe should break down the intra-Europe trade barriers, and I think that they should break down the external trade barriers, because what we find is these artificial standards are called non-tariff trade barriers, and that they are a major problem throughout the world.
That's great, and this is going to be the last question then today, I think. We'll conclude it up here back in the front row, please, sir. Laptop, name and outlet.
Hi, Laurent Thomé with Agence France Presse. Couple of questions, if I may. Could you tell us if President Trump, what happened with Air Force One, and if you think, if President Trump will be here on time for his meetings and his speech? And this morning, President Macron's office said that France wants a NATO mission. A NATO exercise in Greenland. What would you have to say about that?
Couple of things. I believe President Trump is going to be about 3 hours late. I haven't seen the updated schedule. And that if this is what all President Macron has to do when the French budget is in shambles, I would suggest that he focuses on other things for the French people.
Would you take a question from the UK, special relationship? Go on, one question.
Sure. We'll have one last question, very, very eloquently asked. If we could have the microphone. Microphone woman's left. Here, feel free to use my microphone.
Hi, Sue Chan from The Telegraph in London. Sir Keir Starmer has irked the president on issues such as Chagos, as you mentioned, the digital services taxes, and of course Greenland.
And Diego Garcia.
Yes, of course. Are these issues tied to more progress on UK-US trade ties, and are any more trade talks scheduled? Thank you.
I haven't seen that any more trade talks are scheduled. As you know, UK stepped up. They became the model for the first trade deal. And as a result, as always with President Trump, the first deal is the best deal. And because of special relationship, UK got a very low rate. I think that we are continuing to negotiate, but that there have been some glitches in the trade deal. I am sure that the Starmer government will push forward.
Fantastic. Thank you so much for the time, everybody. We'll stay in touch and have a wonderful day. Thanks a lot.
That was the U.S. Treasury Secretary Scott Bessent taking questions in Davos. Quite a fiery press conference at times. Let me bring you some of the highlights that we heard from Scott Bessent. He kicked off by saying that the U.S. is the premier destination for global capital. Grow, baby, grow is our agenda for all our allies. In terms of the latest around Greenland, I thought one of the most interesting pieces of the press conference was when he was asked about a suggestion that Europe holds leverage in the form of holding U.S. treasuries. And to that point, Scott Bessent pushed back, saying that is not a dominant risk here. That was a view that was perpetuated by Deutsche Bank. And I've got the note here from George Saravellos, the Deutsche Bank. He published it earlier in the week on Sunday, saying that Europe owns Greenland. It also owns a lot of treasuries, and highlighting the leverage that this potentially gives Europe. And on that point, Scott Bessent said that is not a risk at all. It's George Saravello saying that Europe is America's largest lender, with countries owning $8 trillion of U.S. bonds and equities, almost twice the rest of the world combined. So suggesting that we could see Europeans look to ditch some of these U.S. assets, including treasuries, if the situation escalates from here. And he basically said the Deutsche Bank CEO called up the White House and said, this is the view of one analyst. It is not the view of Europe as a whole. So really pushing back against that narrative, that risk that is circulating around markets. And then finally, from a logistics perspective, Scott Bessent confirmed that President Trump is likely to be about 3 hours late today. So we may have to hold on a little bit longer to hear from the U.S. leader. Well, the headline event today is, of course, President Trump coming to Switzerland. He is planning to take the stage a little bit later this afternoon at the World Economic Forum. We're going to bring you his speech live on CNBC. Our colleague Andrew Ross Sorkin will be speaking to ECB President Christine Lagarde, the CEOs of BlackRock and Citadel, and academic Adam Tooze this morning, examining the parallels between the 2020s and 1920s. That conversation will kick off shortly. And coming up next on CNBC, we'll be speaking to the chair of Investor AB, Jakob Wallenberg. That's coming up next.
Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick. Here's Miss Jo Malone, CBE.
I started that first business of skincare. That's when I knew that I was in charge of my own life. And that's when the entrepreneur really, although I didn't know what the word entrepreneur meant, that's when the entrepreneur really took hold.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this. Very warm welcome to Scorebox Europe. We are live from Davos in London, and I'm Steve Sedgwick, and these are your headlines. US stocks see their worst day since October as President Trump ratchets up the Greenland threat, and US Treasury Secretary Scott Bessent defends the administration's stance.
Denmark's investment in U.S. Treasury bonds, like Denmark itself, is irrelevant. That it's less than $100 million. They've been selling treasuries for years. I'm not concerned at all.
CNBC's Joe Kernan will speak with the US President, Mr. Trump, later today. Well, a lawless world and a rupture to the global order. The French President Emmanuel Macron and Canadian Prime Minister Mark Carney lead the international condemnation of President Trump's foreign policy tactics.
We do prefer respect to bullies.
We are in the midst of a rupture, not a transition.
The Bundesbank President Joachim Nagel tells CNBC new tariffs would hit Europe's growth outlook and sends this message to the US President.
We should really be cautious what's going on here. And I really hope that the US President today in his speech, I hope will change his mind and coming to a different position.
EU Commission President Ursula von der Leyen said there is a, quote, real consensus around the idea of European independence, and in her keynote speech here in Davos urged member states to embrace it.
We will only be able to capitalize on this opportunity if we recognize that this change is permanent. Of course, nostalgia is part of our human story, but nostalgia will not bring back the old order. And playing for time and hoping for things to revert soon will not fix the structural dependencies we have. So my point is, if this change is permanent, then Europe must change permanently too. It is time to seize this opportunity and build a new independent Europe.
I think this is absolutely the perfect time to speak to Jacob Wallenberg, who is the chair of Investor AB, also has positions at Farm, Patricia Industries, Wallenberg Investments. Jacob, one thing I know about Wallenberg's and the investment operations that you run is you think long term. That there's no knee-jerk reaction in any of your investment strategies. And I've spoken to many of your team over the years about this as well. The current situation is fraught. It is concerning, especially for Europe, I think, as well. Does it provide an opportunity or an added risk for you and your investments?
Well, of course, uncertainty is risk. It's just a fact. Having said that, I think one has to keep one's calm, follow what's going on and not jump to conclusions. But net, I mean, we live in a world that looks very differently. We go from globalization to protectionism, trade war, etc. So it's we had these traditional guardrails, points of reference. They're not really there any longer. In all fairness, we can wake up in the morning and have a fairly new situation in front of us. So all of that, of course, makes things more uncertain, makes all of us standing on our toes and trying to follow what's going on as best as we can.
Jacob, and I follow some of your investment strategies and some of your company's investment strategies, and up till now, they have had no concerns about investing in the United States, no concerns about investing globally if it's the right fit for Wallenberg companies, for FAM companies, for investor companies as well. Are you rethinking that given your answer and given what we're seeing about the more fragmented, less globalized world?
Now, I think, this has to go for the individual company. But as a matter of principle, do we have a problem investing in the United States? No, we do not. We have to look at every market, what's good, what's not good. But of course, the sort of framework we're looking at is different today compared to a few years ago. And so that has to play in. But as a matter of principle, of course, we don't have a problem with that.
Do you fear, though, that there will be a growing schism between Europe and the United States at both a policy level and indeed perhaps that will mean that there are less opportunities for your companies in those areas?
Of course, we're sitting here, we're waiting for the president to arrive, we're talking about Greenland, we're talking about trade, tariffs. Of course, this is, it's hanging in the air, and of course it affects all of us. That is the world we're living in, and we'll just have to wait and see.
But is there a point in the cycle, my final point on this, and we'll move on to what you are investing, is there a point in the cycle where you say, we just have to hold on? Obviously, as I say, you never think short term in your investments, you always think for the longer term as well. Is this just a dangerous point in history to be investing? Is there a pause needed, or is there a message coming from you and the rest of the key players at the various Wallenberg industries that actually now's the time to pause?
I think that it is a bit of wait and see. I think it's important that Europe comes together here, as we've heard over the last few days. I think that at the political side, standing behind Greenland and the country of Denmark, Europe has to stand united. We in business have to stand, I believe, united behind politics and show a unified sort of view. That has also been communicated from business, from the ERT, from Business Europe, etc. And having said that, yes, there's a bit of wait and see, if you ask me. I'd like to hear what the president says today.
I think we all like to see what the president has to say, with trepidation as well. Okay, Jacob, what are you excited about at the moment as well? We've talked a lot about the biggest risk that we all have. We can't ignore it. What are you actually excited about?
I am excited about what we heard yesterday from Ursula von der Leyen, from Macron and others, that Europe is coming forward even more strongly with the need for more research and development, creating competitiveness, the capital markets union or investment and savings union, all these things that were part of the Draghi report, that there is a concerted effort to push this much stronger forward. I see that as an opportunity, and yes, we've heard that music before.
You knew where I was going.
But I'm a firm believer in the future, and maybe this whole situation as such, the silver lining is that Europe has to come together. We have to take care of ourselves in a way that maybe we haven't been able to historically.
Jacob, you would never run a business the way the Commission is run, and rightly so. Look, I've heard these speeches way before the Draghi report as well. I remember a brilliant, inspirational speech from Bruno Le Maire talking about Europe and it's seizing the day with young companies, with R&D, with industrial policy, with actually making sure our companies can compete on a global basis. And my most dispiriting conversations in the last 12 months have been with European Commission ministers saying, or commissioners who have been saying, look, we have to deal with Ukraine. We have to deal with Trump. We can't afford to spend our headspace on these other things which are critical. In fact, if anything, as you just said, we should be accelerating those points.
Yeah.
We're moving in the opposite direction.
All I'm saying is that I believe in the future.
Yes.
I believe that we're pushed there. I hope we will see more sense of urgency. I think it's fundamental for Europe. You asked me, what am I excited about?
Yes.
I am excited about what Europe knows and has in terms of assets. Terrific people, universities, R&D environment, etc., etc. We have to do more. I'm the first one to agree with that. But we have the building blocks to do something with, and that I see, of course, as an opportunity. Jacob, born optimist.
And that's fantastic as well. You are wearing a jacket which has a US tech company name on it as well. Where are the investments? Well, I mean, we could be wearing a European tech company jacket, but where are those big European investments, and what are you getting most excited about? I know that you have enormous investments in AI and quantum, what have you, but is there an area in Europe actually on the technological front where you think we can compete?
No, you just touched upon it. I think AI is important, an important opportunity. A lot is being invested in that. We see new AI companies with people leaving the United States, starting European nationals, starting AI companies in Europe. Of course, that's a great opportunity, and it's a must. I think it's fundamental for all of us in business to super engage in AI, development of AI. If you miss this boat, you're going to have a very difficult time catching up. I also believe in sustainability as a business opportunity. A number of customers are looking for green solutions, and I think we do focus on that, and we should continue to focus on that.
I'll address both points, if I may, before we end this interview. The AI conversation, I hear enormous amounts about the progress that China's making. I've just come back from the Middle East, where absolutely phenomenal the way they're moving ahead there as well. The US speaks for itself with its hyperscalers and its Titanic companies in both the private and the public markets. Where's the European equivalent?
We have a number of institutions that are moving in this direction. You have a number of French ones. You see the whole environment in the Nordics with Sweden entrepreneurship, a very deep capital market, maybe the most dynamic one in Europe today. You have Finland with slush, etc. I mean, you see a lot of things happening here. Of course, it's not at the same scale as the United States, but it's there are the beginnings of something that you can build on.
And you mentioned green investments. If I was here in Davos, I say 5 years ago and certainly 10 years ago, you couldn't move for people talking about net zero, for green initiatives, what have you. It's gone very, very quiet. It's barely mentioned. Does that mean that progress isn't being made, or actually are we just in a new pragmatism?
I mean, you're prohibited to mention it in the United States. So of course,
because of the administration or because of general culture?
The administration. It's very clear that you're not allowed to touch some of these subjects the way we're used to. But I think net, as I said, we have a number of customers that are looking for green solutions as a business question. And of course that will continue. But yes, to your point, there's less focus on it today. That is a fact. And of course, you look at the EU. The EU probably went too far. Too many new rules, too detailed, choking the development of companies at the expense of general development. So I think we have to find a balance in this, which is what the Commission tried to do with the omnibuses. And I think that was very good and very important.